SPY is breaking out and I'm back. So let's crack open this chart and see what's going on in the stock market today. All right. So today SPY was up 0.96% and we had a very bullish day that did break out above the February high. And I'm telling you right now, this price action invalidated a lot of bear theories that were telling us the market was going to crash. You know, all of the talking heads that have been out there all year long saying this is still a bear market and we're going to crash and there's no way SPY is going to 420, let alone 430. And the market is going to drop all the way down below 350 and hit 320. All of that is BS because nobody knows exactly where the market's going. We simply read the chart. And there have been people all year long that have told me that I'm way too bullish and that is going to hurt too many people because I'm telling them the market's likely going higher. But here we are and the market's going higher and you tell me who's likely getting hurt the most. The people listening to the chart that's bullish that are still trading bullish trades, or the people that are expecting a crash trying to short a bull trend. It's time to wake up and follow the chart and follow the price action because there is nothing more important than following price. So with this bull breakout, you're going to see it on increasing volume, which is exactly what we saw today because we are about to short squeeze a hell of a lot of people out of this market. There are so many short sellers that have been piling in preparing for a crash. And now that we're breaking out to the February highs and we're breaking out to new higher highs, that has confirmed the bull trend for everybody who has been doubting it. We already knew this was likely coming because of the big tech sector leading the way higher, and now we're getting the official breakout in the S&P 500. So where we're likely heading next is the gap fills above at 421 and then 425, and then the previous August highs in the 430s. Again, this is likely where we're going, but nobody knows for sure. So we're going to continue following the price action, and that means we need to see a breakdown through a critical support before we say the bull trend is dying. We are not going to guess. We filled the gap at 415 and we have the gaps now in the 420s. And in order to get bearish, we need to break all the way down to a lower low, which is going to require a close below 410. That's a long ways away now, so we won't have any confirmation in price until we start to break down. So the best risk level to use right now is the February high at 417 and the 50% retracement at 414. It's a bull trend until it's not, and we're following the price action and letting it do all the talking. On the NASDAQ 100 triple Qs, we were up 1.86% today, and we closed way outside the upper Bollinger Band, which is likely due to a short squeeze because we are getting that breakout above the August highs at 333. If I zoom out, you can see the August highs were broken today, which means we're squeezing out all of the shorts that had their stops above that level. That is likely where SPY is going next, which means the triple Qs are likely going to continue pushing higher as well. And I have the next upside resistance up here at 337 where we closed today, and then just above at 339. We can push higher than that, but with this overextended condition, we're likely going to be due for a pullback, which is going to be a retest of that breakout at the August highs at 333. So even if we're going higher, we are likely due for a cool down in the big tech sector before we go any higher, which is going to be the retest of that breakout in the 330s. If we go lower than that, we can retest the breakout at the price target at 327, but more than likely at some point we are going to be due for that pullback, even though we may reach 339 before we see it. So as I continue to tell you, follow the price action in the trend and let it do all the talking, because if you're shorting the triple Qs this entire year, you are having a horrible time, and the chart has been broadcasting it was a bull trend the entire year. On the Dow Jones, we were up 0.43% today, and the Dow Jones is closing right here at critical resistance at 336 because we need to clear this resistance trend line and break out to a higher high above 337 before we can say we're breaking out of the short-term downtrend. Even though the short-term downtrend does look like a bull flag, we need the confirmation of the bull breakout, which is going to be that close above 337. Critical support levels will be 334 and this previous support down here right around 332. On the Russell 2000 IWM ETF, we were up 0.61% today, and we are getting the bull breakout in the small caps because we're breaking the resistance trend line and we're breaking above that resistance to a higher high above 176. This bull breakout from a higher low into a higher high means we're likely going higher to fill the gap at 181 next. If at any point we see a false breakout, we should instantly break back down below 176 and then come down here and fill the gap at 171.56. On the ARKK ETF, we're up 1.4% and we are starting to break a critical resistance at 39, but we're not getting bullish until we break above the critical resistance at 40.5. We still have gaps to fill to the downside, so there's no reason to be bullish until we can clear above the 40s. On the VIX, we were down 4.8% today, with the VIX crushing back down to 16, and it's been bouncing off of 15.7 lately, so that's exactly where we're going to be looking for the cool down. If the VIX continues lower, it means we're more than likely going to continue into this bull trend, which is already evident in the price action breakout in the S&P 500. On Bitcoin, we're currently down 2%, and Bitcoin is trying to break down through that critical support at 27,000, which is going to validate this as a double top and a head and shoulders pattern, which is likely bringing us back down to 24 to 25,000 or the rising 200 daily moving average. Don't get bullish if we break down below that critical support, because it means we're likely going much lower. On Google stock, we're up 1.65% today, and Google is breaking out from the top of that upper channel, and we have reached the price targets that I had above, which is right around 117 and 119, and now we're pushing through 122 and we're likely heading to 126. This is a very impulsive breakout, but it is likely getting overextended and due for a cool down. And that cool down will likely be a retest of the breakout right around 117 or the gap fill at 113. So even though we're likely going higher in the short term, we are likely due for a cool down, and I do expect to see this rally to fade as we see the triple Qs retest the breakout. On Amazon stock, we were up 2.29% today, and Amazon is also getting a bullish breakout above the resistance trend line and that price target right around 115, which means we're likely heading to 121 and then 125. We have the breakout as long as we're above 115, so that's your risk level if you're bullish, but do understand we're getting a little too far overextended outside that upper Bollinger Band, which means we are likely going to retest that breakout before going any higher. On Microsoft stock, we were up 1.44%, and today we did reach the price target at 318.5, and I did tell you if we reach these levels, we would likely be due for a cool down, which could take us back down towards the support trend line and the breakout level right around 304. That doesn't mean I'm right, and that doesn't mean we can't go higher, so if you're bullish on Microsoft, manage your risk right here at the breakout right around 315, and if we break below that, then expect the cool down, which could take us back down towards 304. On Nvidia stock, we were up nearly 5% today, and Nvidia is finally squeezing out all of those shorts as we run up into earnings, which means we are likely going to see the cool down in Nvidia stock after earnings, because even if it's a perfect earnings report, we're likely going to see sell the news. Now, I told you the price target on Nvidia was 298, and if we broke above that, we would likely go to 300, and we squeezed all the way through those price targets and came all the way up to 317 before finding a little bit of profit taking into the close. But I don't think we're going too much higher before we see that cool down, which is likely going to be sell the news after earnings. Way up here, we have little resistance until we get all the way up towards 347, but I don't expect to get there very quickly because we are likely going to see a pullback and a retest of this breakout right around 298. This stock has been absolutely obliterating bears that continue to try to call a top, so don't short it until you see evidence in the price action that it's rolling over and dying and going into a downtrend. On Tesla stock, we were up 1.74% today, and Tesla is very close to the price target at the gap fill, which is 177.65, and then we have another gap to fill at 183.58. With all of the bullish sentiment in the big tech companies, it's likely Tesla is finally breaking out, and we are getting the bull trend of higher lows and higher highs on the daily closes. So for that reason, stay bullish in Tesla as long as it's above 173 or the support down here at 167. On Apple stock, we were up 1.37% today, and Apple broke out again to another higher high, which is above the price target at 174.5, which means we're likely going to the next price target at 177. Again, these are bull trends of higher lows and higher highs, so don't short these stocks until we break through critical support and confirm a downtrend. Critical support in Apple is going to be right here at 171, and if we break below that, then you can try to short for the price target below at 167. On the financials, we were up 0.74%, coming into critical resistance right around 33, and there's also going to be a gap fill, so we could find instant resistance once we get there. The industrials were up 0.73% today, breaking back above all of the moving averages, so we are very close to getting a bull trend. We just need the confirmation of the break back over 101. The healthcare sector was down 0.24% today, coming back into this critical support at 130, and it's bounce or die from here, so if we do bounce from here, I'm still looking for the higher price target at 137. On the energy sector, we were up 0.73%, still in a downtrend and still below the resistance at 80, and we still have a gap to fill to the downside at 73, so we are likely still trending lower in the energy stocks. So jumping back over to the S&P 500, without a doubt, this is a very important lesson to learn because a lot of people have been overly bearish all year long and continue to call for the stock market to crash, even though the chart has said that is not happening. Follow the price action and trend and let the chart do all of the talking, and always manage your risk based on what the price action is giving you. With this bull breakout, it's likely we're going to continue higher until we lose the bull trend. So we are going to stay on this bull and continue to ride this trend until the price action proves otherwise. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.